Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, October the 22nd, 2012. We're looking at the U.S. markets today, starting off with the Dow Jones Industrial Average. Had some interesting activity today, so let's see if I can draw this out for you guys. At intraday activity, we saw the Dow was down roughly 100 points and then turned around and reversed and closed positive, up about 2 points for the day. What happened there? You had to close here, and then you had a intraday. We had activity actually pulled back down to this level. We were kind of just lagging around here. That gave us a series of lower lows if we had closed that way, and then we had the same time period, the corresponding time period on the ultimate oscillator. You had this low point here, and then you actually had a higher low about here, and that would have given you a bullish divergence formation, and that's why you bounced intraday. It didn't have to happen intraday. It could have happened the next day. You're going to actually start to see this on many charts, and so I'm expecting a lot of bouncing activity going on. I am not in any way, shape, or form interested in buying this, and there's two different ways you can trade this, and I will show you what I will do, and I will show you the other way that you could trade this. Basically, again, the main thing to focus on here looking at this chart is the new downtrend that we're in. Once you have a series of lower highs and lower lows, you are then at that point in a downtrend. So whenever you're in that scenario, you want to be looking for short opportunities. You want to find those opportunities to sell at or above the 50-period moving average. Well, we're at the 50-period moving average right now. That red line indicates a 50-day moving average. So this is where you want to be selling, not where you want to be buying in the downtrend. Now, I could take the stop loss limit of my actual open trade right now and advance it down to 1 cent above today's high. I could simply just put my stop right here rather than where it is right now, way up here, or I could even advance it to this point here. If you are not comfortable holding through a bounce, something of that nature, that's what you should do. Take your profit, because you're going to get stopped out the next day really easily, and then just walk away from the trade and hope to get in again later. The problem is, like I said, you want to be shorting at the 50-period moving average or above it. So to be stopped out at that point doesn't make a lot of sense to me. You understand what I'm saying? Now, there's another argument here. What if this doesn't actually stop at 50-period moving? What if you bounce up there and you take out the previous highs and you just start to rally? That's a possibility, and I'm betting that's not going to happen. If you don't like that bet, then of course you wouldn't want to trade it the way I'm trading. I'm leaving my stop where it was. I'm not going to advance the stop here because this is where you should be looking to go short. The last item I'd like to note is that whenever you have a bullish or bearish divergence, these divergences tell you to look for a bounce. In this case, it'd be telling you to look for a bounce, but it does not equal a trend reversal, and that's the most important element of the chart is the trend. Looking now at the NASDAQ, you can see the basic same overall story and same potential situation develop here. You've got this head and shoulders formation, which is called a major market top, and a change in the trend from an uptrend to a downtrend. Then you have a close, not once but twice below this neckline here. This neckline, it was at one point acting as support here, and even a little bit here, and now I expect we'll find resistance there. It means we can bounce, but we're just going to hit resistance, and that's where you want to short it again and look for it to continue to go lower. You can also bounce through that and come up here and hit that the red line of the 50-period moving average. Then at that point get short again and roll over. So you have a couple choices here. You could advance the stop loss limit on your current open short position simply down to 1 cent above today's high. You'll likely be stopped out the following day, and then you will either miss the opportunities you can use to move lower, or you will get short again. Whether you can pull that off or not is I don't know. So right now that's why I'm leaving my position open on the short side. I see this as having a lot more downside potential here. Again, same overall story that we had on the Dow Jones Industrial Average is what making us bounce today. You've got this point here, low close, lower close here, trending down. At the same time period, you've got this low point here on the ultimate oscillator. This higher low here forming. Intraday activity was even lower, and we were trending up. That is a bullish divergence calling for a bounce. Again, a bounce does not equal change in direction of the trend. So the trend is the most important part. That is clearly down, and that's what I am actually betting on. So any bounce to the upside here, I'd be looking for an opportunity to get short. Looking now at the XOI oil index, this one I have advanced the stop on. It's a new position that we actually opened up today, so I want to reduce risk excessively. The point for this particular trade is that it is actually very difficult here to tell you exactly what's going to happen next, because you have two conflicting very strong signals. You have the previous peak here, you started to roll on down, you come up here again, and now you get a series of a breakout of this downtrend line and this pullback here that makes a lot of sense to us. for different reasons. You've got, like we talked about Friday, you've got this shooting star, this shooting star, this shooting star, this shooting star telling you there's resistance here. But you've also got this pullback here. It's basically finding support upon this previous resistance line. And that can be conflicting signals. This pullback could be nothing more than a period before we start to move higher again here. The main thing that I'm looking at here that's a little stronger than that, because just a pullback here, it wouldn't bother me, but this other indication would. You've got this pullback here, this move here, this lower low here, this move here, and this pullback here. What does this look like to you? It's an inverse head and shoulders pattern, or at least it could be. You actually need to look at the close here and the close here, and then actually draw a trend line across that. You can see that would be the neckline there. If we closed above that, that would confirm that reversal signal, and that would be looking for a move to go much higher once we broke out to test and pass the previous high. So again, this is something that I'm not willing to risk a lot on, so I'm going to advance the stop, eliminate risk, see which way she goes. If she breaks out tomorrow, then I could see somebody buying that. If she actually continues to move lower, then that's fine. We're totally ignore this potential setup here. But right now, it could go either way, so I just protect myself. The SPX, the S&P 500 Large Cap Index, did the exact same thing as you saw in the overall markets everywhere else. Low close here, you were actually forming a lower intraday low point here. It was trending down. Corresponding time period on the Ultimate Oscillator was trending up, indicating a bullish divergence, calling for a bounce. That bounce has just pulled us back up as of now to the 50-period moving average, where we'd be shorting anyway, so it doesn't make any difference. I'd leave my stop exactly where I'm at and just expect the actual trend to be stronger than the actual divergence formation here. The last chart we're going to look at today will be the VIX, the Volatility Index, which runs the inverse of the S&P 500. In this particular scenario, like I said, I can still see some bouncing along in the S&P 500, the Dow Jones, NASDAQ, so forth and so on, and that would make sense to see a pullback in the VIX at the same time period. However, I wouldn't look for a substantial pullback, and a little pullback would make sense, but actually pulling back here and finding support at the 50-period moving average would make a lot of sense to me. You are in a series of higher highs, higher lows, so that would be where you look for your next entry point on the VIX. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free. And all we ask in return, please refer a friend. I'd like to point out one more little detail right quick. This divergence right here is a negative reversal signal telling you that this move to the upside show momentum was going higher, yet the price activity couldn't actually meet that or match that, telling you there's a lot of sell pressure there. Notice what happened next. You had a pullback. Didn't change anything. It just pulled back and then continued in what the actual direction was anyway. So that's what we're looking at with the actual U.S. markets now, is we're seeing the bullish divergence telling you to look for a bounce, but that doesn't necessarily mean anything more than a bounce. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.